welcome to the Trading Battle sponsored by ACAP. Today, we are joined by Oscar Salem of Biscuit Capital and Jared Johnson of DayTradersFX. What I love about today's battle is that we are pitting a professionally trained former bank dealer with a self-taught prop trader. Oscar is old school, uses the $3,000 a month Bloomberg platform, works with big funds and institutions. Jared is like most of our audience, using readily available savvy technology and probably Twitter for news. We'll ask him about that. And today, believe it or not, we have Oscar trading off his laptop and iPhone and Jared on his pro office setup. So, in terms of background, Jared worked for a prop firm in early in his career and went on to start his own business a few years after. He manages money and runs a trade group now. Oscar and I come from the same world. We're both former bank dealers. He traded emerging market currencies for Banco de Nacional de Mexico, HSBC, Wells Fargo, Citi Bank, and now runs an FX consulting firm. Jared doesn't just do FX. He trades stocks, options, and dabbles in a lot of different instruments. So he's got a lot to share with us beyond the traditional Forex products. So let's get right to it because you're all in for a treat today. There are 3 challenges in today's trading battle. We'll look at who comes up on top at the end of today's session and declare the ultimate winner next week. So, Jared, first I'd like to invite you to come on and talk a little bit about, what you like in terms of the best short-term tactical trade for today's session.
Thank you. Nice to be here. Happy to be with you guys. For short-term trades, so, because I do try to watch all the markets, I'm definitely keeping an eye on oil and where oil crude might be headed. And that's keeping kind of my attention on some of the CAD pairs. So I'm definitely interested in some of the CAD pairs for some short-term pullback and see if we can get a couple little corrective trades going on some of those Canadian dollar pairs. That's probably going to be my biggest focus today, I think.
So if we're going to kick off with the first trade, are you looking to buy dollar CAD? Is that the play that you're starting the session off with?
So I'm a little torn between, if I can show this chart for a second, we have some dollar CAD activity that I think looks pretty interesting. I like the Euro CAD as well. So I think the Euro CAD is kind of interesting, and I think this little sell-off that we've seen looks ripe for at least some pullback. So yeah, I'm torn. If I need to call the first trade, I don't know. It might be dollar CAD.
So while you're mulling on this, you have to tell us what this blue indicator is. I'm sure our audience is eager to find out.
So I love this. This is like one of the greatest indicators. I actually use 2. Well, I use 3 indicators kind of pretty consistently, and this is probably one of my favorite ones. This is just a volume profile. It just kind of shows us where volume is where volume has been heavy in relation to price. So a lot of people look at volume kind of at the bottom of their charts that just kind of says what happened on what day. But I'm definitely interested in this, how big volume has been at certain prices.
That's really interesting because not many traders look at volume at price versus volume per day. So are you telling me that you're going long dollar CAD here at 123.71?
I think so. I think dollar CAD. I'm kind of looking at some of the shorter term charts here. I was hoping this wouldn't break out before our challenge today, and it's already kind of made a little bit of a run. So I feel like we're going for a late entry here. But yeah, I like dollar CAD long around this area. Maybe we can set a small limit order and buy a dip. But I think there's a long opportunity here for a little bit of a run up on dollar CAD.
So where would your stop be on this trade?
So typically I like longer term trades. So I use larger stop losses. For this kind of a setup, if we're looking at kind of where all the key levels are on this dollar CAD right here, obviously we got a lot of activity down here right at about 120-ish. So that's 300 pips away. For a long-term trade, I would be scaling in long all the way down to about 120. So I'd spread my positions across kind of this 123 down to that 120 area. For a shorter-term trade, we don't really have anything too interesting beyond this low. And this is a pretty convincing looking low. We have a pretty nice, you see the 4-hour chart. We got a nice candle for all the candlestick lovers out there. We've got a nice hammer on the 4-hour chart. So I think that's pretty encouraging. So on the short term side of things, I'd probably put my stop 10 to 15 pips below this low right here. See if we can get a pullback and keep it above that level.
And what is that price again?
Yes, sorry. That price is about 122.85. So I'd probably put a stop loss maybe around 122.60-ish, 60, 65, 122.60, 65, right in that area.
Okay, and what are you targeting?
So some of my favorite targets. I'm an old fashioned. I like pivot points. So I've got a couple of pivot points on here that I think we could look at. I think that there is. Uh, I think that there's a lot of good potential and opportunity to get up some of these past weekly pivot points. I mean, if we could hang on to this for a little bit longer, I think 125 is a great target. Otherwise, for a shorter term trade, I'm probably looking at around 124 to 124.25 area. So
So does the volume distribution at those price levels tell you anything, or it's just the pivots that you're looking at for the targets?
yes, so our volume profile over here has definitely given us some good signals. So you can see that, for this period that we're looking at right here, that takes us nicely through that consolidation. So, oftentimes when we have those heavy volume areas, it can slow down those movements, right? And it can kind of create a little bit of resistance, a little bit of consolidation, and that's kind of why I'd be looking around that, kind of that 124.50-ish area is kind of an initial 124 to 124.50 to kind of just get into that heavy volume, see if that slows down the upward movement, causes some consolidation. So
So
yes,
that's
definitely.
so good stuff. So why don't you go ahead and place that trade on the platform and with the stops and limits for our first trade. And while you're doing that, this is a very what Jared just showed to us is a very valuable insight. I personally do not use this the volume based indicators, but it's a very wonderful visual way to look at congestion points. So I think that for our viewers at home, it's a very valuable resource to start adding to your charts or to take a quick peek on to know where the congestion points are. And the more volume that you have at certain levels, the more unlikely that it's just going to clear through those levels easily. So, I think that little nugget is definitely something to take away.
Yeah.
Oscar, what are you looking at for the first trade to kick us off? It doesn't have to be
So,
Forex, but I know you're
so
the Forex king.
no, no, not even close. But thank you for the introduction. And you are correct. I am old. I'm old school as well. So one of the things that I do, and one of the things that I preach is, if you're looking for instant gratification, markets are not your thing. I tell the guys, if you're looking for instant gratification, you might as well go mow your lawn. You'll get more gratification out of that than trading FX.
I love mowing
Another
the
thing that
lawn.
I do is, yeah, is I try to keep things very simple and focus on, a few assets that I can get really familiar to, and what more familiar than the euro. So right now, currently, I'm a little bit of a euro bull. I think that, the both the long term and the short term charts are showing me that the euro should go a little bit higher, and that goes back to the type of the global macro framework that I'm looking at. Um, I do think that there is a little bit of a lot of a reflation thematic in the market. So I am a buyer of that reflation theme. And I do think that the dollar could get a little hurt going forward. I think that in the next 3-4 weeks, we're going to see a little bit of dollar weakness. And I do like the level of the euro, and I'm going to try. Like you said in the dinner, I am at a dinner in New York, so I'm going to try to share a chart with you guys um, of long-term euro. Give me 1 second. I think I lost you. Oh, can you see me?
We can see your Microsoft screen. But yeah, just click on that and I think it'll show up.
Do you see that chart?
Yes.
So that is the weekly euro chart. It has an extension from that double top. And if you see that that is a legitimate count, then that is an ABC extension for me. And now it's made a nice little bottom there. So ideally, I would get into this trade sub 116, around 115.85. But I'm gonna, I have conviction in it, so I'm willing to buy it here. Whatever the price is right now, I think it's 116 and a quarter. Buy euro dollar here, put a stop, sub 115 and a half, so maybe 115.20 would be my stop, and let that thing run for a few weeks. I think we could see north of 117 easily, maybe 118, 118.50 on this trade.
So let's talk about this trade a little bit, and if you don't mind actually putting it on the platform while we talk about this.
Yeah.
I know that you oftentimes will say that you're a pure but technical trader, but
Correct.
it seems like the basis for this trade, or part of the basis, is that you're a reflation bull. If that's the case, then it seems like you do incorporate fundamentals into your trade. And how important is that? Is it something that kind of drives the general movement, so you just look for price levels, or please walk us through how you incorporate fundamentals into this?
Well, you're right. I'm basically more of a pure technical guy. So fundamentals do matter, right? But in this case, I'm not looking at fundamentals, Kathy. I'm looking at the charts. On the S&P, I'm looking at the Nasdaq charts, and I'm looking at this pullback as the beginning of the final wave higher, as the beginning of a wave higher in risk. So not only am I bullish euro dollar, I'm also very yen, and I'm using this pullback to scale into short yen positions, right? So I'm looking at different yen crosses. CAD yen, now that Jared mentioned CAD is one of them. More so than that, I want to buy, Aussie yen. I want to buy commodity currencies against the yen in these pullbacks, because I do think that we're going to see a final wave in risk that is going to probably take, high beta FX higher, the dollar lower, and obviously yen and the funders a little lower as well.
So, for our audiences that are listening, while Oscar claims that he's a pure technician on price levels, I can tell you from personal experience, he's probably one of the most insightful macro FX guys I know. And he's telling you he thinks that the bull rally is going to continue. And that probably means that there's a further risk on in equities, further risk on in currencies. There's, euro is more depressed than some of the other currencies. The yen pairs are very overextended, but from his perspective, he thinks the party is going to go on. So let's see,
Correct.
We'll have some time to see whether that happens or not.
Correct.
So we've got Jared in the dollar CAD trade, and we've got Oscar in the euro dollar trade. They're actually opposing trades, because dollar CAD, being short CAD, I would say, is a little bit more of a risk off trade than a risk on trade. But so one of them's got to be right, one of them's got to be wrong, right? So we'll see how that goes. So now, I think it's time to get a little uncomfortable and have you guys start thinking about trades for your opponent. In challenge 2, what we're going to do is you're going to pick an instrument for your opponent, and that person will choose the direction. The goal is to give your opponent a trade that could set you up on top. So don't go easy on them. Now, since Jared went first, Oscar, I'll let you start first and decide what instrument dare Jared to trade. And Jared, you tell us what direction, how long you want to hold it for, which at least has to be 15 minutes. But since the market's so quiet, I don't think that anyone's going to be closing the trade soon. Give us your direction, stop, and limit, and why you like this trade. So,
Okay,
Oscar, go ahead.
I'm going to give you a caveat first. I never hold a trade for 15 minutes. I never put on a trade to hold for 15 minutes. All the trades that I put on have defined downside, and obviously if the downside hits in 15 minutes, then I'll be out. but I'm not. I'm more of a swing trader type of guy. And I do look at. You're right. I do look at some fundamentals, and then I try to incorporate them in my charts. One of the traits that I do like is Euro Sterling. So I'm going to throw that out to Jared. I'm going to throw Euro Sterling at him and see what he wants to do with it.
Oh, the old Euro Sterling. Quite nice. Let's see what we got here. Boy, I haven't looked at this chart in a while. So are you guys going to be bored to death if I go through 3 minutes of analysis here? Because
If you talk us through it, we won't be. Tell us what
okay,
you're looking at and what you're feeling, what you're seeing on the charts.
okay. So here's my outlook on everything. Now, if we just go, so as a disclaimer, so when I trade Forex, I'm like 90% technical, right? So I'm just going to go on just the technicals. When I trade equities, I go a lot more on the fundamental side of things, and I think
Correct.
that there is a lot to be said about that in the in our Forex setups. But if I look at this chart right now, in all the years that I've traded Forex, all I have known is that if I look at a long-term chart and I try to buy near pretty long-term lows and I try to sell near pretty long-term highs, most of the time I'm going to come out okay. So if I look at this chart, all honesty, I haven't traded the euro pound in like a really long time. But I look at this chart right here and I see this consolidation. This takes us back to about 2016. Oops. So as I see this consolidation right here, I'd look at that and I'd say, if I'm just looking at this in a technical kind of way, that looks like something that probably has a little more downside to it. But again, something that I would probably be scaling into on the long side. Now, of course, some of these things. Obviously, we got a short-term situation we're trying to deal with here. This would be something that I wouldn't do anything with yet, but because we have to, I will. But I think probably for me, my long-term outlook would be to buy against this. I mean, it's been in this channel since summer of 2016. So we have a 5-year channel, 5-year support that's about 120 pips below current price. So that tells me something. I'd probably be buying dips and trying to get a little bit of a bullish movement out of that. As you guys can probably see, I'm a bit more of a contrarian trend trader. I don't really trade with the trend in currencies. I'm more interested in finding those big levels and entering off those big levels. And if those big levels don't hold, I can get out with minimal loss. So that's why my longer term trades, I try to find those big levels, just like we see right here. And so something that I would do on kind of on a longer term basis would be to say, okay, this is only 100 and change pips from that low. So I'd scale in, maybe 2 or 3 kind of smaller positions, make sure it can hold that level, and hold on to it for the rally, for the move up.
Okay, so right now you're going to place that long trade in Euro Sterling at 84.30, right? And put some stops and limits on it.
Yeah, heck yeah. So
All right.
I'll give this thing.
Let's get in the game.
Yeah, let's go for it. Let's put on some euro pound here. There we go. Let's see if we can get a little action out of this thing. The thing I love about the euro pound, going back to Oscar's comment about mowing the lawn, it's like watching grass grow. So the euro pound is a watching grass grow currency pair. But I think once it moves, I think it moves awesome. But this one we could be in this for the long haul. So if you'll bear with me, I'm going to go smaller position size. I'll buy this puppy right where it is. I'm going to put a stop loss below. What was that level we said? So probably stops below 82, 50, 60 is probably where I would put a stop on this one. So we'll just say 82.50, a good round number for the broker to take me out and then start going back up. So we'll take. Just kidding, to all brokers out there, I know you guys don't do that. Okay, so We'll put in a stop on this 82.50 on my euro pound. And for the record,
I like that trade too. So good call there, Jared. I like it higher.
Which is really interesting that you guys both like the long euro pound trade, because on a fundamental basis, the Bank of England's gearing up to raise interest rates, and the ECB, they lost the Bundesbank head this week, so he's
That's
an
right,
uber
Wheatland.
hawk. They lost one of their most hawkish members, which will set them back even further. So
Correct.
the charts are telling you one thing: the fundamentals, unless you see it differently, Jared or Oscar, don't care, which is fine too. The
Price
fundamentals
matters.
and policy is not on your side on this, because the BOE could be the next one right behind RBNZ to raise interest rates. So we'll see we'll see who comes out on top, the technicians or the fundamental traders.
Baked in the cake.
Okay, so Oscar, what's the trade that you've got for us? Sorry, no, Jared, what's the trade that you've got for Oscar to look at?
I think I got a doozy. So Oscar brought this up, yen pairs. So I think I like the risk on trade, but I think the yen pairs pose a pretty interesting situation right now. It's kind of like, would you want to buy the S&P right now? Yes or no, right? And so I think yen, I don't know. I'm there. There's two. There's two I want to put out there. I think yen pairs are interesting, but actually, I'm going to pivot here, hardcore. Aussie New Zealand. What do we think about Aussie New Zealand?
Good old Aussie Kiwi.
Yes.
I don't have my charts in me, but that thing has broken down some big time support, I think. So gun to the head that I don't do anything. But
Jared,
if I had
would
to
you
do
mind
something,
putting up your Aussie Kiwi chart just so that we can show a chart up there?
I got it up.
Thank you.
just put the weekly one.
Great.
Aussie Kiwi. Now put what is that? The daily?
That's a weekly.
Put the daily chart on. So I would be buying against the low, against that low of, what is it? 10. What is that low? Yeah, what is that low?
That is 102.80.
If you could draw a Fibo from that bottom to that top, please.
I don't know if you can. Let me get this out of the way here.
Yeah, I can see it. So
you're looking to go
38
long.
is broken. Up. So I lost it. There we go. So I would. So we are the 61 right now.
Yeah, right. The 61 is right about 10400.
Yeah, I would be a buyer here, small, with a tight stop. I would buy Aussie Kiwi and give me about 50 pips if that's the gun to the head trade.
All right, so it sounds like, and how far would you go northward?
If this thing starts turning, I think Aussie Kiwi could potentially go 106, right, by looking at that chart. If you can put the weekly chart up.
That is great. Here, hold on. Let me get that. Okay.
So, yeah, I mean, for the sake of this exercise, I'm a buyer giving me 50 pips. I'm going to buy a medium-sized position. We're right at the Fibo from that bottom, so that could be the beginning of a wave 3 higher. We saw wave 1. This corrective wave lower would be wave 2. We're at the Fibo at 61.8. I would buy it here by looking at that chart and give myself an extension to 106, right, with a 50-point stop. So that would be a 3-to-1 trade for me at that point. So I'm a buyer there.
Oscar, I'm a buyer too. I've been long the Aussie New Zealand for like a week, so we're on the same page on this one. We can't agree on the euro sterling and Aussie New Zealand at the same time, but I think we have.
Yes, we can. You can come to work at BCM if you want.
So, what's really interesting, Oscar, go ahead and place the trade on your platform. And what I want
trying.
everyone
How do I?
to notice is that both our former bank dealer and self-taught prop trader are counter trend traders on a technical basis.
I'm a trend follower.
But you didn't follow the trend. You try to pick the bottom. Aussie Kiwi's crashing right now. So how's that a trend following trade?
Well, I mean, I'm looking at that, and I'm counting. I'm counting from the bottom. So my assumption here is that the trend started from that bottom, and this correction that we see here, right, from 105.80 is the end of leg 2, and we're going to resume the trend higher. That's my bet here.
So you're looking at the 2-month move and looking for a resumption of the 2-month move, which is interesting. So I guess we will see if that works out. Like the euro sterling trade, in some ways, the Aussie Kiwi on a fundamental basis is kind of a wash in the sense that it's clear that the Reserve Bank of New Zealand is raising interest rates. They were one of the first major central banks to raise rates, and they plan to do it again. But Australia, they're really coming out of their pandemic lockdown strong, and they could enjoy that recovery that a lot of the Western nations have enjoyed. So, for me, it's a bit of a wash to see which one comes out on top, whether it's rate hikes or a renewed recovery. So that's definitely a very interesting trade. Now, before we get to a third challenge, we have a little time. And I'd like for both of you, since you've been in the market for so long, to share your one most valuable trading tip that you have for our viewers at home. Jared, do you want to start off?
Yeah. In 20 years of trading, I've picked up a lot of stuff, and I would say most of it has come from a painful place. When you get tired of laying on the floor in the fetal position with a little bit of drool coming out of your mouth, you say, okay, I'm just going to not do that thing anymore. And I had a couple of those experiences in my early career. So it taught me some important lessons in trading. I hate to be so cliche, and I know this is probably what everybody wants to say, but for me, just risk management has been the most important thing. I always tell myself that, like, my risk barometer is when I put a trade on, do I feel stressed out or do I feel okay about it? If I feel stressed out, I already know that I might be trading too big and I might be trading too aggressive. And so risk management has saved my life in trading, and it's kept me, it's allowed me the flexibility to figure out the things that I may have been doing wrong or the thing that I might have done wrong on that trade. And so just keeping my trade sizes manageable and on the conservative side has been probably the most important thing I've ever done.
So let's unpack that a bit more. What do you mean by trade size? Is there a percentage of your overall portfolio that you feel more comfortable with in terms of allocating per trade? Or are you looking at it from a different perspective?
Yeah, so I think, just in the very basic part of it, just the absolute size of my trade relative to my account, right? What percent am I risking on a trade? I read this great interview. Everyone knows what's his name now? Is it Seth Klarman, the fund manager? Do we all know him? The Boston-based manager. Anyway, this guy has managed 10, $15 billion for like the last 4 decades. And he uses on this massive fund 20% of his account, right? So he's produced these 20% annual gains on 20% of his account. And he's left 80% untouched. And I just read this the other day and I thought, that's how I've been trading for the last at least 15 years. Once I got over this, and to be honest, these kinds of trades that we're putting on here, these short-term trades, I want to keep my trades small and I want to spread them out, because one thing I've learned in trading is that tops and bottoms are just so impossible to find, right? If we can get into the general area, that's all I'm trying to do. And I do that through small trade sizes spread out over kind of a large area. So if normally I might trade one standard lot, I'd rather have 10 mini lot trades spread out over a 200 pip area than one standard lot trade, at one price, hoping it stays, within my stop loss and profit target, parameters.
So it sounds like, you don't focus so much on getting the most precise entry. You just want to be in the neighborhood and just kick off your first trade and then scale in as it moves either in your favor or against you, as long as it stays within the technical structure that you like, while risking only, a controlled amount per trade and, per overall investment. Good stuff. Now, Oscar, what would you say is, your most valuable tip that you can, or advice you can give to our viewers at home?
So, so Jared touched on a couple of very important things, right? The most important thing for me, and there's several things that we look at on risk management that are, but you have to always know what your downside. Always know what your downside is. When you trade, or when we trade, when we look for alpha in markets, what we're really looking at convexity, right? When you risk 1 unit to make 3 to 5 units back, right? So what I tell the guys that work with me, or that have worked with me, or that I talk to, is number one, you don't have to trade everything. You can trade 2 or 3 times a month and be a hero. Number two, control your downside. Always control your downside. Make sure that you know how much risk capital you have deployed. And number three, when you deploy risk capital, obviously 1 unit or 2 units or more, know how much you're going to risk and have a target, right? I'm wrong, I lose $1,000. I'm right, I'm going to make $4,000 or $5,000. Always know your downside. Don't overtrade, and look for those setups that give you, defined downside, right? Not necessarily where you think the pair is going to go, or how much money you think you're going to make, but more so how much money are you willing to lose to make that call, right? And be disciplined about that. Keep your losses at 1 unit and keep your wins at 3 units, and you're going to be okay. But most traders make the mistake of saying, oh, I think this is going to go here, so I'm going to make X. I think that's the way of looking at it. The right way of looking at it for me would be, I am willing to bet 1 that I'm right, and I'm trying to make that 1 3. But I'm going to be wrong at this level, and this is how much I'm going to willing to bet on this level. And so I'm a little bit backwards than a lot of the traders that think I'm going to make X. I'm thinking more, I'm going to risk X. So my analysis starts from how much money am I going to willing to deploy to make a call.
So you've got a number, you said that you have a number of traders that trade for you. Do they all trade your way? Do they trade different instruments? Do they trade different strategies? Can you elaborate on, do you use them for diversification? Can you elaborate a little bit more on their approaches?
So basically, it's not a lot. We are a very, very team, and we pretty much have amassed a team of people that think very similarly on risk, not necessarily on how we view markets, but on how we deploy risk. We want to be pretty page. The most important thing for us, like I said, is we need to control the downside. Especially when you're trading for somebody else, right? You don't want to, when you're trading else's capital, you want to make sure that you're controlling how much money you have at risk at all times. And then the winners, the ones that you're going to win, the trades that are going to be winners, that's, as long as you're not losing, or as long as you're respecting your stop loss and you can trail those stops, and you know how much risk capital you have in the market, then let the winners come to you, right? Always pick a level where you're wrong.
I feel like I always have to say trading has ruined my life, because you always have to go against the norm, right? You got to look where things don't work, hey, I'm not watching Squid Games on Netflix because everyone else is watching it, right? My inner trader says you
Right.
can't do it. Everyone else is doing it. So we always have to look for the thing that the crowds are doing and stay away from it. So I love it. I love it, Oscar.
Contrarian at heart. All right, so let's move to our final challenge, which is the one I'm most excited about because it's really about the way you trade on a day-to-day basis, and it's looking at what your best idea is going into the weekend, the week ahead, and not just a forced trade under forced market environments. So, Oscar, do you want to go ahead? I think Jared was the one that went first last time.
Yes. Again, these charts are stale. Bear with me. Check with the chart I wrote. Appreciate it.
I got you.
I am again. I've been long euro yen for a while. I think euro has a lot more to it. Right now I'm trailing a stop. But if I was going to initiate a position, I would initiate it here at 250. And sure that you know how much you're risking. I would risk. And the one thing is that it's not necessarily how many pips, but how much capital. That's going to dictate how the size of your position, right? So I'm going to risk 3. I'm going to put 1 unit of risk in there. Get long euro yen. I'm sorry, risk sub 131.50. Get long euro yen here at 132.5, and let it go. I think that we could see a big sigma move in cross yen, and euro yen could be a big beneficiary of that. So,
Okay, so you're
long
going
euro
long
yen
euro.
at market.
Okay, so you're going long
Long
euro
euro
yen
yen
at
at
market.
market.
While you're putting that trade on, I'll let Jared come in and talk about what his favorite trade is right now.
Oh, my favorite trade right now. So going back, can I say 2 things? I'll make it quick. So yen pairs, I am totally on the same page here as Oscar. I think yen continues weak because if we look at just what's happening in the S&P, for example, this is a great indication of are we going to see more yen weakness? Can the S&P continue higher? The only thing I'm looking at, the only way or reason I might be a little contrarian to Oscar on this one is as I look at the S&P here and I think to myself, and of course keep in mind we know the S&P is basically the FANG stock, so we get that, that's fine. But as I look at this and I think maybe this is going to be a little bit of a broadening pattern, and my contrarian comes in and says, do we have a little push higher to the? Oh my goodness, come on, there we go. Do we have a little push higher to the top of this and then a correction to the low? And so I think if that were to happen, I'm getting pretty interested in something like the CAD yen short. So I might do a short on a yen pair only because, and I think there's a whole lot of yen trend left, but I think for the short term, I look at these charts and I see this kind of extension that we've seen in kind of the last week or 2 or 3. I like selling rallies on yen pairs. So if we look at kind of a longer term chart here on maybe the CAD yen, keep in mind super bullish oil, and so I'm looking at things becoming overextended, and I think that there's a pullback to be had here, and we see this crazy level over here on CAD yen. We're getting right to this high about 9,300 ish, taking us all the way back to about 2015. If I had to take a trade off that level, I think that's what I would be doing. I'd be selling against 93, 93.15. I might give myself a little extra room on a stop loss, maybe 9,400, and I would be targeting, again, targeting somewhere to short between 92.50 and 9,300 for some sort of pullback into some of the heavier volume into some of these areas down here. I think we might be able to see a move back down into the 90 level on CAD yen, so maybe a 250 pip move down.
All right, so our two traders are on complete opposite sides of the market, which means that while we're not getting any movement right now in Asia, I think that when the dust settles next week, we're going to have a definitive winner because they're on completely opposite sides on their yen trades, and they're also on completely opposite sides on the trade for the first challenge, where Jared went long dollar CAD and Oscar went short Eurodollar. Right now, it looks like Jared is
Euro
on
dollar.
top. Sorry, long Eurodollar. Jared is on top. It looks like right now due to his dollar CAD and Euro pound trade working a little bit. But from my experience, the tides turn quickly, and since there's really no real action right now in the Asia session, we should really see these moved on Friday, particularly since we have Canadian retail sales, and next week when we really get a chance to see how the ECB rate decision probably affects these euro trades that a number of both of our traders have on. So that'll be some very interesting outcomes for that. Now, we just have a few minutes left, and I want to thank both of you for joining us. And I want to give you a little bit of time to talk about what you do and how our audience can get in touch with you. So, Jared, can you first put on that trade with CAD Yen so we can get it onto the scoreboard?
Yes, let's get it. Let's get some.
And if you want to, share the stops, share the stop. Did you share the target?
Yes. Yeah. Okay. So can we do a pending order, or is this market? We go in market.
Market.
Okay, market.
You like it around this neighborhood, right? So
I like it. Okay, so I'm going to put a smaller position on, and if we have enough time, before everything's over, I'll put another position on higher. But going short here on CAD yen 92.20, putting a stop loss. Where did we say? So we'll say 93.50 for my stop loss. So I'll put my stop loss 93.50, looking for a target at 90. So we'll put this on right now.
all right, I see it coming up on the scoreboard, so that's great. They'll let our producers, our viewers track them as the week progresses. So in the meantime, maybe, Oscar, you want to talk a little bit about, how our audience can get in touch with you, what you do, and, the services that you provide.
Sure. So BCM is first off a small asset manager. We have some investors that have been with us for a while that give us an allocation, and we try to return alpha to them using primarily the FX market. We're also a consulting firm. We work with several firms, PMs and individual firms, on advising them on FX risk, FX strategy. And one of the most exciting projects that we've launched about 6 months ago is our website, which is biscuitcapital.com. And that is an attempt to democratize FX a little bit for everybody else. So we're trying to give institutional coverage to the independent trader, right? With a fantastic blog that we feed every day, and about 5 to 10 setups or game plans that we put out every month. We also offer our subscribers charting. They could send us any asset they want, and we would chart it for them. And we're trying to give the independent trader a more of a institutional type feel in FX that we don't think it exists out there in the markets. So that's really exciting, something that we launched about 6 months ago, and the tracking has been great.
That sounds good. It sounds like personalized service. I haven't heard many services where you can send them a chart and they'll give you their take. So that seems like it's pretty valuable. And I'm sure our producers will include the website Biscuit Capital, and that's how our viewers would reach you. So Jared, how would our viewers get in touch with you?
So everyone can stop by DayTradersFX.com and say hi, join our email list. I send out some market update videos every week or so, and kind of give people an outlook on what I'm looking at and in Forex, stocks, options. And likewise, I run a trade group, and we do a lot of interactions as far as recommending trades and talking about people's trade ideas. And we have several live webinars every week to kind of help. I would say that I love what Oscar said, because I think that's a big focus for a lot of traders right now, and it certainly is for me, to kind of help people cross that bridge into this seemingly the financial markets can feel a little overwhelming sometimes. So with a little bit of TLC, I think it goes a long way with a lot of people. So that's what we focus on in the group, just getting people kind of up and running and trading their own accounts and trading their own money. It's great. You can get that information at DayTradersFX.com.
So thank you, gentlemen, for joining us. That was another great session. I know that I got a lot out of it. The two most valuable nuggets I got is, number one from Jared, which is the importance of price distribution and how you can overlay that on your charts using the trading view charts and see, where the key congestion points are. And from Oscar, his firm belief, and even in some ways Jared's belief, that the party isn't over, and that stocks have hit record highs. Some of these yen pairs are super overstretched, but our two superstar traders today believe that the rallies could continue. So that's some interesting food for thought. So once again, thank you both of you for joining us. For our viewers at home, thank you for watching the Trading Battle, proudly sponsored by ACAP. I look forward to seeing you at the next one.
Thank you, guys.
Thanks, everybody.